exceptional items at rupees 2,668 crores was up 12%. Net profit at rupees 2,717 crores increased 4% year-on-year. In the quarter, there was a one-off credit from favorable resolution of past indirect tax litigation, benefiting both top line and bottom line. Excluding this, our USG, EBITDA margin, PAT BI growth would have been 3%, 23.8%, and 7% respectively. Our growth was competitive with about 60% of our business winning value share. Importantly, we continue to win volume shares in more than 75% of our business. On a sustained basis, we have been winning share in large part of our business, which has resulted in a significant corporate share gain in last 2 years. Talking about margins, our gross margins improved 700 bps year-on-year to 52% and is back to pre-inflationary levels. With competitive intensity remaining high, we have stepped up our A&P investments by about 700 crore year-on-year this quarter. Moving on to performance across the three segments. Home care delivered 3% growth on a very strong base. Beauty and personal care and foods and refreshment both grew 4%. Home care and beauty and personal care, which constitute 75% of our business, grew volumes in mid-single digits, while foods and refreshment saw mid-single digit volume decline due to higher price levels to offset input cost inflation. Margins in all three segments remained healthy, with home care at 19%, beauty and personal care at 27%, and foods and refreshment at 19%. We had a busy quarter with many innovations going into the market. Pond's hydration regime, Indulekha anti-dandruff oil and shampoo, Vaseline's new range of premium moisturizers, and Lakme's range of makeup products were some of the innovations launched in beauty and personal care. In FNR, we have launched artisanal slow churn ice cream made with 100% fresh cream and real fruits. We have extended our Horlicks Plus range with 2 new variants, Strength Plus for adults and Growth Plus for children. In home care, Vim Pure and Comfort Intense Fabric Conditioner were launched. Moving on to our first half performance, our turnover grew 5% year-on-year, just shy of rupees 30,000 crore. EBITDA margin was up 90 bps year-on-year to 24.1%. Profit after tax before exceptional item grew 11%, and net profit at rupees 5,189 crore was up 6%. The board of directors have declared an interim dividend of rupees 18 per share for the year ended 31st of March 2024, a 6% year-on-year growth in total payout. Looking ahead in near term, we remain cautiously optimistic. FMCG demand is likely to continue a gradual recovery with tailwinds from upcoming festival season, sustained buoyancy of services, and government's thrust on capex. At the same time, we need to be watchful of heightened competitive intensity, volatile global commodity prices, as well as impact of monsoon on crop output and reservoir levels. If commodity prices continue to remain where they are, we expect our price growth to be marginally negative. Our focus remains on driving competitive volume growth, stepping up investments behind our brands, and maintaining EBITDA margin in a healthy range. We will continue to manage our business with agility and take actions to ensure long-term 4G growth that is competitive, profitable, responsible, and consistent. With this, I complete my prepared remarks, and now we can take some questions.
Thank you, Ritesh. Shesa, would you like to ask the first question, please?
So basically, I would like to understand, you did mention that the volume recovery will be gradual, but what we have seen in Q2 is the 2% volume growth is the lowest in the last 7 quarters, if I'm not wrong. So could you tell me that when do you actually expect a meaningful recovery in volume? From which quarter onwards?
Yeah, if I can start by framing the response to that, and then maybe Ritesh could help me with some of the details there as well. So first of all, if you disaggregate this 2%, 2.5% actually, by divisions, actually we've grown in mid-single digits on our 75% of our business, which is home and personal care business, which is pretty strong, and it's in line with our strong traditional quarters. Where we've seen a decline is in food and refreshment, where actually prices have gone up, and we're still seeing an impact of inflation on the volumes in those categories. So it's the mix of the two that generates the number that it does. Having said that, We expect the volume recovery to be gradual because pipelines are adjusting. Consumers are still paying higher prices that we're selling in, and over a period of time, the prices will land on shelves, and we'll start to see the impact of that in consumption. Also, we expect this process to take a few quarters, as we mentioned last time, and therefore we will see a consistent improvement in volume growth. Having said that, we hope when we've gone through this whole cycle of inflation, deflation, and we're more in the steady rate, we should be looking at our mix of 50-50 volume value growth, and we go back to our traditional sort of CAGR of 8-9% that we've had in the last decade. So our intention now is to do the right thing, keep investing for competitive growth behind our brands. As you've noticed, our investment this time is significantly high on our brands. We've actually increased the investment over 65% if you take it over last year's base. So we're doing the right things for the medium to long term, and we're quite certain that given the fundamentals of the business are strong, that the competitive volume growths will come back, and we are very, very focused on that as a one single-minded mission for the entire company end to end at this point of time. Ritesh, anything you'd like to add?
No, I think absolutely very clear. And if I just probably add a little bit of context on the past as well, we have seen high inflationary period in the past as well. We had seen in 2008 and 9 for skin cleansing. We saw in laundry 2012 and 13. We saw for tea in 13, 14. In each of these periods, we saw as commodities went up, it impacted volumes. As commodity came down, there's a gradual recovery of volume. That's the exact phase we're going through. If I just quote, for example, FMCG overall price for the market, this quarter, consumers are still paying 3% price inflation, which means all the price cuts that we have taken, they are yet to witness. And once that happens, our view is that volumes will start recovering gradually. And again, remember that we have grown our volumes at 2.5% in this quarter on a base where we had grown our volumes by 4% against market, where on a 2-year basis, market is roughly flat.
Okay. Also, the festive season is underway. So, sorry, just
Tessa will come back to you. Shilpa?
Okay.
Right. Hi, thank you. Thank you, Prashant. Hi, gentlemen. I'll just take the question from where Tessa ended. In fact, we're just heading into the festive season that's underway right now. What are early indicators of demand telling you right now? And, Ritesh, to take on from your question that you spoke about, the price cuts yet to be reflected. It's been, I think, over a quarter since the price cuts have hit the market. So when do you actually see that translating into volume recovery? Can we say that will be closer to that 50-50 level that, Mr. Rohit was talking about the next fiscal, or can we see some signs of that going towards that later into this in the second half of this fiscal as well?
Yeah. So let me do the pricing question, and then we'll hand over to Rohit for festival. So on pricing, as you know, in this quarter, we had roughly flat price growth. And our view going forward, Shilpa, is if commodities remain where they are, we would see, in fact, marginally negative price growth in short term. So that's the pricing outlook given where the commodities are at this point in time. Of course, on a long-term basis, commodities are cyclical, which means what has come down will go up, what's gone up will come down, and it will stabilize. And on a long-term basis, to Rohit's earlier point, we do see FMCG growth roughly 50-50, where we expect half the market growth indeed to come from price and half should come from volume. So that should come. But given where we are at this point in time, that's where the equilibrium is. Second, even in this quarter, Shilpa, in current quarter, we did take price decreases. We did price decrease in soap business. We also took price decreases in our laundry portfolio, because this is where we have given the full impact of all commodity, which has moderated. And typically, we've seen that a quarter later, consumers will start seeing benefit of all of that as the trade pipeline clears up. Market had seen 14% price growth at one point in time. For last 4 quarters, it has now come to 3% in the current quarter, where we have 0% price growth in the quarter. So I expect a quarter more for that fuller impact to be seen to the consumer. But when the equilibrium will come back, in my view, is more cyclical and more, I would say, a few quarters down the line as we start seeing commodities starting to stabilize. But let me hand over to Rohit on festival.
Yeah, I think just want to state the fact that very important indicator is the competitiveness of the volume growth. And we see in large parts of our business, we're competitive by volume. And, the derivation of that on top line, and eventually we're a big business with mixed of many, many categories. So you see an average number. What we're tracking is, are we investing on our brands competitively, which we are. as I mentioned to you, this quarter we've increased our A&P by 420 basis points, 65% over last year. And we know we are very, very competitive and we'd like to stay there. We can start to see that in our competitiveness and volume, which is quite healthy. And now we just have to stay the course and keep doing the right thing for the business to eventually find that stabilized level when the cyclicality of this is over. And it is across different businesses at different parts. Now, coming back to the demand question, what's very encouraging is that we are in a market where we see growth coming back in rural, although they are on a weak base. We also see growth coming back on a positive way in urban. And if you zoom further, we see more growth in urban, in large packs, in more in higher income households. We believe there's also strong government investment in infrastructure, which is finding its way into the economy. And that is creating a tailwind. And we believe secularly, this is a good trend. And as far as the next quarter is concerned, we hope that we are able to leverage the festival and the demand is positive. There, of course, is the unknown and the downside of monsoons. We can't say what impact it'll have. But generally speaking, we are very, very optimistic. And that's how we'd like to operate in this business, with optimism, but with one foot in reality.
All right, thank you. I'll come
Vinny,
back in a
would you
bit
like to-
with more
Shilpa,
follow-up
will-
questions on that.
Sure.
Vinny, would you like to ask the next question?
Yes, sure. Good afternoon, gentlemen. Thank you so much for giving me this opportunity. So, I want to take back a step back because last quarter we had spoken about some of the competition coming in from smaller and regional players. One, what is the update on that we have? Is that still a tough competition coming in, and which categories? And also in terms of rural outlook, like you were mentioning, that unseasonal monsoon, that is something that has impacted FMCG players or overall in terms of the movement that we're seeing. So how is the rural outlook now looking like so that we can look at, forward looking, does it look that we could see some recovery coming in?
Ritesh, would you like to just respond?
Yeah. So let me pick up Vinny first the rural. And what we're seeing for rural, the demand is recovering gradually. And of course, the point still is that the growth that we've seen now of roughly 7% volume in rural market, it's on a base of a 9% decline same period last year. So if I look at a 2-year basis, there's still a marginal 1% decline in rural volume, which means the markets are not yet fully recovered. So that's one. But what is really helping this point in time, the recovery, the point Rohit mentioned earlier, inflation moderating gives more disposable income to rural consumers. That hence is leading to recovery of demand, though gradually. We have seen the real rural wages, which were negative, have now come into some positive territory. That's a good news. We have seen that the government expenditure to support rural economy had been increased a few years back, and that has been maintained at a high level. That is helping rural recovery. An equally higher amount of capex, which is getting spent both in last budget and the current budget put together, that is also supporting overall rural income. So there are many factors which are, let me say, in favor of rural demand recovery, albeit the recovery is gradual. And of course, to Rohit's point earlier, we have to watch out in terms of monsoon. Monsoon has been uneven, and we know that we're ending the period with a lower amount of reserve level as well. So we have to see what impact it plays out on the Kharif output now and Rabi sowing later point in time. Overall, we do remain cautiously optimistic and expect demand to continue to recover gradually. So that's on rural demand. And if I just probably answer your question on competitiveness, I mentioned in my opening remarks as well that overall, we have seen small players when commodities do come down, and we have seen at mass end more amount of competitive intensity as more players now are participating in the market. That happened in tea to start with, where the loose tea prices came down, premium tea got inflated more, and almost the commodity decoupled. And hence we saw more demand of consumers down trading, and hence we saw that loose tea players doing much better business. That was one element which was happening. Second element on competitiveness was again in mass end in, let me say, detergent bar. Very similar as commodities came off, we've seen that element of the market growing faster than large players. So in pockets of those certain geographies at certain price point, especially mass end, we have seen competitive loss. But overall, the point we mentioned earlier that on a 2-year basis, we have strong market share gains. Even on current year, we have market share gain, and our volume growth in terms of competitive volume growth in more than 75% of the business, we are gaining volume share as well.
Thank you, Ritesh. Nupur, would you like to ask the next question?
Hi, sir.
Hi, Nupur.
Asking the next question. हाय सर सर मेरे दो सवाल है बेसिकली जैसे कि आप बता ही रहे थे कि गवर्नमेंट एक्सपेंडिचर में हमने बढ़त देखी है तो रूरल डिमांड ग्रेजुअली इम्प्रूव हो रही है तो हम ये कह सकते हैं कि इलेक्शन ईयर भी है स्टेट इलेक्शंस की भी डेट आ चुकी है नेक्स्ट ईयर इलेक्शन भी है तो आने वाले जो 6 मंथ्स होंगे वो रूरल डिमांड वो बेटर होगी बीते 6 महीनों से और मेरा सर दूसरा सवाल ये था कि ब्यूटी एंड पर्सनल केयर में हमने देखा कि आपने नए लॉन्चेस किए विंटर से पहले विंटर्स और फेस्टिव सीजन इस बार कंबाइन हो रहा है तो यहाँ पे क्या एक्सपेक्टेशन है स्पेशली ओरल केयर को भी लेकर
रितेश आप पहला सवाल लेंगे मैं दूसरा प्रश्न उत्तर दे सकता हूँ
Yeah, so rural, as I spoke, Nupur, earlier, so we are seeing gradual recovery. And as I mentioned, there are more than one factors which are helping the recovery, be it heightened level of expenditure which has remained, be it capex which government is spending, which is going to help recovery in terms of more rural wages. We know that after agriculture, the second most important job source for rural people is nothing but construction activity. So heightened capex should also help rural demand overall in terms of jobs. We have seen rural wages going up and now in a little positive territory on a real inflation basis. Those are the elements along with lower amount of inflation, which absolutely helps to increase disposable income at rural area, and that should help demand recovery. So we do expect gradual recovery to continue for rural demand. And overall beauty personal care, Rohit?
मैं कोशिश करता हूं कि आपको हिंदी में जवाब दूं और उसके बाद अगर कुछ एक शब्द जो है मैं अंग्रेजी बोलूंगा तो जस्ट फॉर द सेक ऑफ क्लैरिटी जहां तक ब्यूटी एंड पर्सनल केयर का सवाल है वो हमारी बहुत ही इंपॉर्टेंट डिवीजन है और उसका जो मेन सूत्र है सक्सेस का वो होता है इनोवेशन और हम इससे बहुत खुश हैं जो हमने काम किया है उसमें विंटर के लिए वैज़लीन ब्रांड है और हमारे जो बाकी ब्रांड्स हैं ग्लो एंड लवली और पॉन्ड्स और उनमें नए नए पैक जो हमने लॉन्च किए हैं जो इस मार्केट विंटर मार्केट के लिए अप्रोप्रिएट हैं और हम काफी एक्साइटेड हैं जो रिटर्न्स हमें दिख रहे हैं ब्यूटी एंड वेलबींग कैटेगरी में हमारी इनोवेशन के इन्वेस्टमेंट के रिटर्न जो नजर आ रहे हैं वो अच्छे नजर आ रहे हैं तो इन सब में ये कहना चाहूंगा कि हम लोग काफी ऑप्टिमिस्टिक हैं हमारी बहुत इंपॉर्टेंट कैटेगरी है और हम इस पे काफी जो है मेहनत कर रहे हैं और इसका जो ड्राइवर है ग्रोथ का वो इनोवेशन रहेगा प्रीमियमाइजेशन रहेगा और नए चैनल्स में जो है पहले पहुंचना रहेगा और हम देख रहे हैं कि जैसे ई कॉमर्स चैनल्स हैं या ब्यूटी स्टोर्स हैं फार्मेसी स्टोर्स हैं सब जगह पे है जो हमारा पोर्टफोलियो काफी कंपेटिटिव है और हमें जो है मार्केट शेयर भी जो है अपना बढ़ता नजर आ रहा है और हम आगे आने वाले क्वार्टर्स में भी जो है इस पे काफी तवज्जो और अटेंशन देते रहेंगे ये हमारा जो है पक्का इरादा है
And Nupur, even in this quarter, if I just call out hair category, we've seen high single-digit growth. Skincare, we've seen double-digit growth. So we also have very strong performance within beauty and personal care in this quarter.
Thank you, Ritesh. Vinny, would you like to ask the question?
Yeah, I have one more question, and I just wanted an update and specifically on the HFD segment. What's happening on that, and how is our recovery timeline looking? Because under pressure, we've spoken about that before, so if you could just give me an understanding on that as well.
I think I can respond on our strategic view of this category, and Ritesh can help me with a little bit more on the granularity of how our performance has been so far. First of all, we see HFD as a big core category for HUL. It is sweetly positioned on what we are good at, which is market development with low underpenetrated categories and a category and a brand that's good for the community. As you know that there is high level of undernutrition and malnutrition is quite prevalent in our society. And if we grow Horlicks and Boost and category brands within HFD, they will be good for the growth and health of our larger community. So we feel we're in the right business. Now we've been very, very more focused on growing the market through more users, more usage, and more premium. As far as more users are concerned, we've seen success over the last 3-4 years with penetration growing. In fact, growing quite handsomely through investments in sampling, through assortment, lower price access packs. We've also seen, insofar as premiumization is concerned, a success in the new portfolio, science-based portfolio that we launched, which is the whole adult range, the plus range, where we see high levels of growth and, in fact, a whole lot of upside in the years to go forward. Our core Boost brand is doing quite well, very, very nicely positioned, very, very good brand, and leveraging the whole Boost with Secret My Energy and the whole cricket archetype. We do need more work to be done insofar as consumption is concerned, which is the more usage part of the market development equation. In that, the category has been impacted by the fact that we've had to take huge price increases on account of inflation of milk. And milk is also a double whammy because it's also used in consumption of the product. So mothers have had to titrate. But as we go forward, we feel as milk prices even up, and as we remain very, very focused on why a cup of Horlicks is really good for your child, which is it makes your child taller, stronger, and sharper, we are beginning to see returns to that investment. So we will remain steadfast and focused for the long term. We know this is a big category in also other Southeast Asian countries where it exists. It's also very, very attractive for us from a profitability and structure. So structurally, we will be able to create a lot of value, and we've done well so far on that front. And I'd like Ritesh to color it more with the financials so we can complete the picture.
Sure. So as Rohit mentioned, that all our consumer metrics are looking very green. We have increased our penetration, and hence overall category penetration has gone up. Our market shares are higher as we have acquired the business, and even in this period, we have further gained market share. So we are consolidating our competitive position there. Our portfolio is stronger and broader compared to what we started with. So our consumer metrics are looking pretty good. Along with that, we have also increased, as we had merged our go-to-market in terms of distribution, we also have higher direct coverage. And if I talk a little more about the margin for the business, over the last 3 years, as we acquired the business, we have driven cost synergies across the board, be it overheads, be it supply chain, be it media synergies. And because of that, we have generated good amount of, let me say, fuel for investment for the business, which is what has funded our market development. In fact, bulk of the savings that we have generated across lines of P&L in HFD, we have invested back in the business, invested in terms of increasing penetration and hence sachet increase, hence increasing in polypack. So we've given more value back to consumer. We have done more amount of portfolio. We've done more amount of market development, home-to-home visits. We have stepped up A&P investments. So we invested back in the business to drive. And we've seen the impact of that with increased penetration and better market share. We have still some amount of savings further to go in supply chain. Over the next 2-3 years time, we'll unlock those savings as well. Those are a little longer term in terms of intervention to be had. But to Rohit's point, I'm saying we are confident of long-term value creation of HFD category.
Shilpa, would you like to ask the final question? We're running out of time.
So I just had 2 quick follow-ups. One, I wanted to check on the food and refreshments category, right? So this time there is a decline in volumes, and I'm guessing that was also because, you said that was because of higher prices. How do you then see now the volume trajectory for the foods and refreshments business? And is your portfolio, do you see you requiring to take more price hikes in your portfolio? That's one. And then the other one on the on the competitive intensity and margins bit also. Now with the festive season, also the media intensity, I would assume, is a lot higher again. How are you now looking in this scenario of higher competitive intensity and the festive season? How much of your gross margins will you be plowing back into A&P spends? Like for the next quarter, I'm sort of trying to understand how much more are we dialing that up?
Yeah. So Rohit, let me answer the margin question. I'll hand over to you on FNR volume and margin overall. So overall margin, Shilpa, if I just exclude the one-off that we had this quarter, we are at 23.8% EBITDA margin, which is very healthy. And what we believe that at this point in time, we want to maintain that margin in a healthy range. And focus will continue to be on driving more amount of investments in the business. Now, we expect that A&P investments, which Rohit mentioned earlier, this quarter we had 420 BPS more investment, albeit on a base which was a little softer because of high inflation last year, but still significantly high, 65% more investment in A&P. And that was possible because we have recovered of gross margin loss. The point I had articulated earlier, at the peak of inflation, we had lost 600 BPS of gross margin. In this quarter, year on year, we've improved 700 BPS gross margin. So our gross margins now are back to pre-inflation levels. From here on, our job will be very simple, which is to focus on competitive volume growth. And to support that, keep driving our muscle of generating savings end-to-end in the organization. We speak about our Symphony program, which generates roughly 7% gross savings. And across all the lines of the P&L, be it promotion, be it media, be it supply chain or overhead, we have any cost which is not helping consumers, we challenge in the organization. And with that savings that we generate, we deploy that back in the business on innovation, on market development, and capability building. So our P&L play going forward will be that. First of all, on A&P, ensure continuously the way we've done in the past, share of voice ahead of share of market. We continue investing for capability and innovation in the business. And to do that, keep generating fuel for investment by driving Symphony and improving mix. So that will be the financial growth model. Margin enhancement in mid to long term, our ambition is to do modest margin improvement, which will come from mix and volume leverage in mid to long term. But in short term, we are at healthy margin and our focus will be competitive volume growth. Let me hand over to Rohit on FNR outlook and reason for what performance the quarter was.
Yeah, I think if you look at our food and refreshment business, we are amongst the, even by itself, amongst the leading, if it was a standalone company, it would be amongst the leading food companies in India. We have a very strong portfolio in tea and coffee and packaged foods, and I spoke about HFB shortly. Now, if you look back at a bit of a longer term history and then the opportunity, and then let's zoom into the short term because it can be quite misleading to just discuss a few quarters that are very, very near term. We've had a double-digit growth rate in tea. We are market leaders now by far. And in fact, as we speak, we have in fact increased our reach and we are increasing market share in tea, even in this market of today. On coffee, we've had a strong recovery in the last few years. In fact, we're going double digits this year. Of course, it's a mix of more price than volume because the coffee inflation is quite high. And on packaged foods, we've had a very, very fast growth track record in our base. And admittedly, here's where we could do much more because the opportunity in packaged foods in India is immense. You can walk around the stores in big cities and you can see the opportunity there is in foods. And we're very, very good in spreads. In fact, our entry into peanut butter with Kisan is doing very well. And our new brand Hellmann's, we see huge opportunity for it going forwards as well. And the mayo category, and Hellmann's is a great brand. We know mayo category globally as well. We're the largest mayo company in the world. So we see big opportunity to take our brands like Kisan and Hellmann's and even Knorr, where we have done initially entry launches with some Korean hot pot, and now we are extending that idea because it's doing quite well. So while in packaged foods, we'd have loved to see more growth this year, but we have seeds which will become big trees in the future. We'll also be looking at any bolt-ons that we might find. So we are really, really excited about the food space. And I think it'll take a while on HFD for us to get the volumes back because of the inflation reasons again. But again, like I said, there we've got all indicators that are positive. So I think we will have to look at this more long term because foods is 2/3 of the shopping basket of a consumer in India, and for that matter in any country. And the huge upgradation that's going to happen in the country in the decades is going to be experienced in foods. This is why you see so many players entering that category. So we remain very excited, very positive in investing in that category for the long term.
Thank you. Thank you, everyone. Best wishes for the festive season. Thank you for joining us.
Thank you,
Thanks a lot.
gentlemen.
Thank
Happy
you.
Diwali and happy festive
Happy
season
Diwali
to
to you as
everybody.
well.